Welcome to Markets Now. I'm Michelle Rook along with Bryan Doherty with Total Farm Marketing. Mixed trade in the grains after a mostly higher opening this morning. We're mixed in the cattle market and lower in the hogs. So it's been an ugly week, Bryan, in the grain trade. We had 2-year lows in corn and beans yesterday. We're trying to recover here. Do you think, is this a dead cat bounce or are we trying to put some short-term lows in?
Yeah, it's been a tough week, not just in grains, in other markets as well, and
Absolutely.
the commodity sort of demise continues this week with funds apparently pretty big sellers again, whether adding or not. But yeah, so our grains trying to put a low in. Well, they're certainly low enough from a historical perspective, and low enough from a cost of production perspective that there's not a lot of reason for prices to be pushed lower and farmers selling to hedge or forward sell at these levels for new crops. So I think the market's trying to probe for low. The problem is it's still perceptive in nature. There's no perceptive view of why an end user should just step up to the plate and get things bought, or why speculators should. Being patient has paid dividends. Um, Livestock feeders have been paying high prices for a couple of years. They kind of feel this is their turn, and being complacent has worked. I would highly suggest that they not get too complacent, though. We likely will have some prevent plant acres in corn, and the entire critical growing season is yet ahead. I don't really consider the planting season critical. It was in 2019, I acknowledge that. But in most years, we talk about delays and they don't come, or they come and they go. It's June, July, August that counts.
Yeah, but why did the funds hit the accelerator button so early this year? And actually, they're short in corn.
Yeah. Well, one, I think they do because they can, and two, it's human nature. If you're on the right side of something, keep adding to it. So they've just continued to add to their positions. But I think also they took stock of when the market basically fell apart was end of February, of what the crop in Brazil, in particular the safrinha corn crop, looked like, and they began to pressure prices there. They know that the Brazilian farmer doesn't have storage for all the corn and soybeans that are produced. China stayed back on the market. In fact, China canceled orders, if you might recall, here in the last few weeks. Everybody recalls. Very disappointing to the market. Again, it sent a signal to the end users to just stay on the sideline, and the funds took advantage of that. The managed money, speculative money took advantage of that. There's unintended selling, and unintended selling occurs when the market runs sell stop orders, pushes lower, and all of a sudden you've got just a lot of selling trying to find buyers who are selective.
Yeah. Now, we also could not buy a bullish story at all, either on the supply side, but also on the demand side, right?
Well, what is the bullish story other than it's cheap and that
Yeah,
farmers can't
there
make
isn't
money
been one.
producing here? But that can change, and that can change in a hurry. And grain markets are not noted for what we call V bottoms, where they go straight down and then come straight up. But when you look at the big picture perspective, and you look at the idea that things are at a level where farmer selling is not likely to occur in great droves or at all, and that end users may need to capitulate on this idea, waiting for the next 50 cents and start getting things done. You're still likely to see some displacement of grains. The West is still short of grain and inventory for the summer. It's probably got to come from the East. So you're going to see that. Bases may do the heavy lifting there. Big picture perspective, Northern Hemisphere crops. Remember, the majority of the world's corn is Northern Hemisphere. And so weather becomes critical. So that's our story right now that the market's going to have to grab onto. Usually there's some weather concerns and weather scares. In fact, in soybeans, we did a little study. 13 out of the last 15 years, November soybeans have exceeded the March high, which is 13.86. Currently, the market's near $12.
Yeah, and when I mentioned we can't get any bullish stories, you had China cancellations, fear of more of that going on. You had very poor exports this week, and South America's big crop coming at us. And so, the market right now sometimes bottoms when the news is kind of the worst, though, doesn't it? Sometimes
Well,
markets do.
sure, it becomes factored in. You can't find
Yeah.
friendly news, but everybody's already sold the negative news. So those who are sold are just looking for the opportunity to move out of their position. I would certainly again encourage that if you're uh, looking to be a buyer, though, don't just rest on your hands here. These are dynamic markets and a lot of volatility. It's the old saying, one bushel too many and the markets are down, one bushel or at least thought of 1 bushel too less, and the market chases it really fast. Um, I am a little bit worried about what is the bigger picture. Why are we in such a malaise? And it could simply be as simple as higher interest rates and worries about world recession is just keeping money out of owning anything right now other than safe havens.
Absolutely, and I guess that was kind of the point I was hoping you would get at is that there's some underlying reason why the funds have really taken commodities and they're not in favor of them right now, but hopefully we have most of the bearish news already factored in here. It was disappointing though this week when you talk about one bullish story, Kansas wheat crop at 1957 lows, and the crop looks like they're going to continue to see abandonment, and we can't even rally on that kind of news.
Yeah, it is disappointing. So the world looks at wheat a little different light than just in the U.S. And is there any urgency for end users? And that's one of the things that in a marketplace, surprisingly enough, when prices go lower, boy, you think demand really picks up. It doesn't pick up immediately; it grows over time because the end user or the buyer is told you don't have to secure inventories. But as soon as they expect that there could be some pain, that is higher prices or reduced production, then you might see a real mad scramble to own everything you can own. We just haven't hit that trigger yet. It's not like the Kansas crop. That's new news. Bit surprised when the crop was really deteriorating, the market was still going down. So the
Right.
fund money took a look at the global supply of wheat and basically said they're not concerned. It's an El Nino year. We'll see how that plays out. But typically, Australia struggles with wheat production. So does Russia in other parts of the world. And so we'll see if that has any play as we develop more into weather markets here over the next 60 days.
So cattle have been kind of the bright spot here this week. New contract highs in the feeders. The live cattle futures have held together with some steady to better cash trade. Do you continue to see us, marching higher here? And we do have a cattle on feed report today. So are we a little cautious going into that?
I think we're cautious, and I'm going to be cautious from the demand perspective moving forward with, as we mentioned, higher interest rates and some kind of rumblings that maybe there have to be even more interest rate hikes. At some point, that starts to take its toll on the consumer willing to pay for tight supply when you have alternatives. And pork is a alternative. Chicken is an poultry is an alternative that may get more play in that type of environment. So yes, supply driven markets. That's why feeders are in new highs. Not easy for those who want to buy feeders, but they are looking at the corn side. It's available and it's cheaper. But the live cattle market, I'm staying in the bullish camp, but there's just a point where it may just, we can all be bullish, but somebody still has to step up and buy it. And that's kind of what happened to corn last fall. We got to a point it was easy to be bullish, but we didn't see anybody step up and buy when it went towards $7. And that started the tip over point.
Yeah, it's always tough to be the last one that buys on the high there, that's for sure. What about this milk market? You and I, the last couple times we've talked, the milk market has just kind of continued to leak lower. And is that a production or a supply or a demand problem? What do you think?
It's both. The consumer seems to be reluctant to kind of step up and really enter into the buy side other than buying as needed. And you see that through daily cheese prices. That just hasn't turned the corner yet. I think that's a function, though, that the cheese buyer, that anybody who uses the supply continues to look at the other side, and that's the production side of this picture. And we haven't seen any sign yet that the producer has moved out. And I think in part, and this is I'm hedging myself. It's my best guess, but I think that a lot of dairies this first quarter, second quarter had pretty good coverage in place, whether through hedging, through insurance products. And so they haven't quite felt the pain that one would expect just watching a market go down. But as you look out, that gets more and more challenging. So we'll likely see at some point reductions in production, but efficiency and more cows this year have continued to be the themes. We've continued to, point that out, and until the market seems to perceptively view otherwise, it's a challenge for the market to turn around. Now, the good news is in milk and sometimes in livestock, when we go down and down and down, it doesn't take long to recover, but we still haven't seen that trigger point yet.
Well, at least not in the front part of the board. The back part of the board is seeing a little bit of a premium though, isn't it, in the
Well, it
middle?
is, and that's my concern, is that the producer sees that as well. If they're covered on the front months, they continue to produce into the fall months, and it's only, again, going back to human nature, when you're at high prices and then prices go somewhat lower, you got to work harder to get the same revenue. So you produce more. You figure out ways to produce more, and that's what I call phase two. I still think we're in phase two. Phase three would be where we really see in earnest production start to slow or change. We haven't seen that yet.
Okay, thanks for your analysis. As always, Brian Doherty with Total Farm Marketing, and that's Markets Now.